Okay, so on to episode 9. We've had a lot of price action since the last video, so let me break a few things down for further understanding. Now, with gold, as you can see last week, let's open up the macro chart, and we're still more or less ranging because the 1480 level, which was plotted on the weekly at the start, more or less some of the earlier videos where I was showing exactly how to break the weekly chart down, you can clearly see gold ran straight into that level. We had 1 spike, 2 spike, 3, 4, and then a 5th, near enough a test of that level. But you can clearly see the importance here was the closure of the candles and the bodies of the candles actually remaining below 1480. Now, what we can even suggest is that this entire area, okay, going from the weekly resistance down to the body, the first body right here, because this was more or less the first low that was made, okay, the drastic low that was made at 1480, we can see that the price continued to consolidate throughout. Use that area again 1, 2, 3, 4 times, 5, 6, 7, 8 times here on the spike, and then non-farm payroll last Friday. Today is currently Tuesday, by the way. I wanted to see how the PA played out after Friday and Monday for me to do this episode 9. What I then seen, a price breakdown from that area where we cleanly broke this low here, this box region. And as you can see, we also had the let's move that across, the 4-hour liquidity area from previous, whereas that came into retrospect just here as the back end of this tail, the back end of this candle spiked through and then price plummeted. After this candlestick closure, we can clearly see that it tested one of our 4-hour areas once again over here. So previously we ran into the area, we broke the area, and then from the highs, it then spiked into the low. The next 4-hour candle, we broke through that and then we hovered. I'm quite surprised that gold didn't push directly into the next 4-hour area of support, which was 1458. The lows were around 1458.5, so not too far off. Consolidation throughout yesterday, bearish engulfing bringing the price back down, but once more, if I was to go in there and use that drastic low there off those two bodies and bring that across, you can see where price respected that on the green candle, and then price pushed back up to these areas in which there's 2 hours and 36 minutes left on this candle closure. If we actually close anywhere, you know, where current price is and actually form a bearish engulfing candle formation, that would tell us, okay, that would hint that this area is being used as resistance now. So we've popped back up into the area. We were above it for this morning's London session, and I'll break this down in a moment on the micro chart. But if we can close back below, this will tell me that this area has been used by the price to give us a nice rejection. Okay, we're now rejecting. So what I would expect on the closure of that candle is a follow through back to the downside. So let's see how this one performs and how this one closes. That will be on the next video. I'll be highlighting that to see how price actually played out. Now, top end over here, as you can see, the price area was broken. We've come into new lows, and once more, the price is more or less repeating the pattern. If we really wanted to, we could take the low up into the first high right there. Okay, see this? So there's two things now. We've just spotted that price could have broken out, and price could now be retesting the top end of this box to maybe push back to the upside. This is where, number one, waiting for candle closure and directional bias is pretty important, because this pattern, you can see it up here as well. Once price pushed into the highs, okay, stay below the 1480 area, we had the bearish engulfing candle bringing price back down, and then we had the follow through afterwards. Again, this was a result of non-farm payroll. See how GA is performing. Okay, that was a result of non-farm payroll, and we could be in for a similar pattern here. Okay, we get the price spike into the upside, popping up, and then price drags lower. Bottom end areas for price continuation on the bearish scale, on the bearish perspective, will be here, here, and then obviously back into the lows, which have been respected very, very well since. So ultimately, if we look at this 4-hour time frame, we are still in a consolidation area. What's also important at those highs, if we combine some of the daily price action, so we have 1 spike, 2 spike, 3 spike into 1480, and then Friday's candle, this huge bearish candle, whipping the momentum back south. So Monday's candle, relatively weak. Tuesday, we're still in action on the Tuesday, but as you can see now, the Tuesday candle is below our 4-hour area. So what can happen is price on the 4-hourly could close bearish and bring PA back down, leaving the daily candle to spike through and continuing the bearish momentum, which was triggered on the Friday. But you can clearly see on Thursday, Wednesday, Tuesday of last week, where price was already hinting that the momentum could not sustain, and 1480 was a very, very important area in which price could rebound and did rebound from. All right. So that's what I'm looking for on the 4-hourly. So we broke that down nicely. Again, just taking bit by bit, studying the candle formation, studying what's given to us on the 4-hour and the daily. And if you go into the hourly, okay, up here on the top end, the hourly was very, very liquid at some points. As you can see here, spike, pin into the upside, whip back down. One point in the day, we'll cover this on the micro in a second, we were above the 1480 area, but I believe it was a session switchover that forced PA back down to make that first initial low, which was respected again on the 4-hour quite a few times. Here now on the hourly, you can clearly see prices fluctuating back and forth. We've had a bearish candle come in on the last hour, and we have 1, 2, 3, 4 spikes to the upside, and then the price was pushed back lower below our 4-hour area, okay, the purple line. So at the moment we are getting some spiky PA on the edge of the box, which we just drew on the 4-hourly, and gold could indeed ping back to the upside on the intraday chart. And again, it all ties into what closure we have on the 4-hourly. If gold does decide to revert to upside momentum, we have our areas and our targets in which gold could do so in order to meet. Now let's look at this. So I've marked on Asia high, sorry, that was the Asia high, and then we came into the London crossover, the switch over here. Now on this is quite important, this is why again we have to really find our way with the fine details and really focus on that. We have the bearish engulfing candle pulling it down, we have the spike to the upside, then London automatically respects the high in which Asia plotted. Then we have a simple break and closure below 1-2 wicks, and then momentum just instantaneously shifted. Now what I had here as well was, I did in fact draw on at the time this session. I'm not going to say this is the session low, because the session low may well be the end of this green candle here, because that was the area in which price pushed back down just after the overlay and then started to make the highs. So I just used the simple trend line tool to mark on that area. Now market psychology, due to the sudden uproar that we've seen, if I just correlate these charts, due to the sudden uproar that we've seen on the left hand side over here, this could have may well been a trap move for buyers above the resistance zone, above the previous high. Okay, so the previous high was here. Traders are trying to get in long. London switchover comes in, spike, 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 and then we dump. But look at where the price actually ran into. So this is the London low over here for the day, and I used that band. What we can clearly see though is that this could have been a nice area for people who were carrying long trades from the previous up moves to place stops. So the psychology, the market psychology at this moment in time, which I'm trying to piece together as a thesis, is in fact something whereas the price dumped straight through that level to take out stops, and then quickly reverted back to the upside. So it made its low in London, and then London retest the 1480 area, the weekly resistance, and then came back in on the US switchover. And look at all of these candles, and look at the wicks, where the wicks were showing us momentum was slowly dying after this sudden forced move. It breaks the previous low, okay, and then respects that London low more or less for the rest of the week. So as you can see, price started to fluctuate back and forth, went into the highs here, and this high was the Asia high, respects it once more in London, see, look at this, it's back and forth, comes back into the London low band, creates a new high on the US switchover, but again correlating that with what we see over here. This is the consolidation, this is the result of the consolidation from the micro into the macro over here. Going forward, price consolidates, dumps once more into London low, quickly reverts out of that previous London low, and this is non-farm payroll. Before non-farm, okay, London pushed the price up, respect the previous Asia high area right there, and then price absolutely tanks to the downside, and then started to consolidate for the rest of the day. The consolidation for the rest of the day actually came into the start of the week. We had the first high of the week formed in the London session, and as you can see there, the low of the week, which was formed, was then retested yesterday, more or less mid US session, right to the pip on the top of the band, as you can see. Actually, if I can just make that a little tidier. There, just came shy of the band by 1 or 2 pips. Today and throughout last night, Asia pushed gold back to the upside, and then it's just trying to figure out what it wants to do next. What I believe, again, I've just gone through the thesis on the 4 hourly, as you can see here, the 4 hourly, 2.5 hours left on that, but the price is fluctuating back and forth. The volume is relatively low as well. If you look at the volume bands here, 1, 2 and 3, the volume is low, so we're getting sloppy PA. Now, for the hourly thesis to come through, as you can see, 3 spikes, 27 minutes left on the hourly. What I'd like to see here on the 15-minute time frame is price to come back above and start breathing above that area. That would tell me that this area has been tested, rejected, and then gold can then start to make headway back to the upside into 1472. So what I would look for, personally, to take advantage of this is the 15-minute closure above. I would look for it to then respect this area as support and then go from there, because as you can see, if we just zoom out, high of the week, it's made a new high of the week now. I can go ahead and just delete that. But that area was prominent, especially after this bullish engulfing candle, and then afterwards, shooting star just brings the PA right back down. Tested it here, broke it through London this morning, and then US session, we've dumped a little bit of a pullback, but now I need to see price remain above that, retest that, and then start to make headway to the upside. Other than that, a decent trade opportunity, which I actually took myself on gold long, was when we made the low, the bullish engulfing brought us back up. This incomplete area was a nice supportive region, nice supportive zone. We broke above that area, we tested it, and we had this small hammer candle. Price remained above. That would have been our go-to to actually place a buy trade on gold, because we can see that support. It's made a new mini lower high, made an equal high right here as well, and then price has started to gain momentum and take off to the upside. So this here was a nice 60 to 80 pip move, and I'm looking at more or less the same again. So what we can do, we can measure from A to B, copy and paste, and then from the low it's just formed, that comes in at around 1472. So let's correlate that to the, what does it come at? 1472.3. So correlating that up with our 4 hour areas, we have 1472.22, which is more or less nearly the same. So I'm looking at one more stride. If not, what we can see is price may dip back below and show us some downside, but I'm not too keen on the downside yet until I see the 4 hourly close, and then I also see a nice closure below these 3 wicks. So I'll need an hourly candle to come down, close below the wick, show us the momentum is bearish, and that would change my directional bias. So I'm going to cut this video, I'm going to do GA separate, and then we'll go from there.